Welcome everyone to this pretty important chat about about taxes. And big thanks to Pro Tax Accountant for setting this up. They're, really a top name in accounting here in the UK. So we're going to jump right in, and it's all about this making tax digital thing, MTD for short. You've probably heard about it. Big changes coming for sole traders and landlords, especially in the UK. Spring Statement 2025, that's where it all kicked off.
Yeah, spot on. And for a lot of folks, this is going to be really relevant, especially if your income from all your self-employment and any property you rent out adds up to over £20,000 a year.
That's right. 20,000 is the magic number here. And listen, this isn't something happening years down the line. April 2028, that's when it becomes mandatory.
But, here's the catch. They're talking about penalties for anyone not on board even before 2028. We should get more of the specifics around, I think, mid-2025 is what they're saying. So best to be ahead of the game, right?
Absolutely. No one wants a surprise penalty. So let's break this down. Basically, we're shifting away from that good old self-assessment we do once a year. We're going digital. Think, keeping records digitally and sending updates to HMRC, every quarter.
That's the big shift.
Yeah.
And it's not optional. You'll need software that works with MTD. There are a bunch out there. QuickBooks, Free Agent, those are some names you might recognize.
Right, the big players. And just to be clear, no more paper records. You got to go digital for all things tax after April 2028. Big change.
Huge. So yeah, let's talk about what this actually means for you, for your everyday business. First off, you got to keep those records digitally. No more shoe boxes full of, receipts and stuff. Everything, income, expenses, all of it, got to be digital.
Got it. All digital. So that's one big change. Then there's the whole quarterly submissions thing. No more waiting till the end of the year to report everything.
Right. It's all about keeping things updated every 3 months. Income, expenses, all of that goes to HMRC each quarter.
So no more last minute scramble in January, right?
Hopefully not.
Now, what about the tax return? The one we all know and sometimes love. Does that just poof disappear?
Not completely. It kind of evolves. There's this new thing called the end of period statement, EOPS they call it, and then a final declaration. The final declaration that's essentially your tax return, but it's digital. Still due by January 31st and after the tax year ends, but all the stuff you've been sending in quarterly, that feeds into it.
Okay, so the quarterly updates are kind of like building blocks, right?
Yeah.
They all lead up to that final picture.
Exactly.
And earlier we mentioned that £20,000 income threshold. It's super important that people really get how that's calculated, so they know if this whole MTD thing even applies to them.
Absolutely, it's crucial. That 20,000, it's a combined total. It includes all the income you're making from any self-employment you got going on, plus anything you get from renting out property. It's not like a separate 20,000 for each business you own or each property you rent.
So even if each little bit of income seems small on its own, it's the total that matters.
Right. So let's say you're doing, I don't know, freelance web design on the side and pulling in, say, 12,000 from that. Then you've got a flat you're renting out, and that brings in another, say, 10,500.
Okay, so that's over 22,000 total.
Boom. You're in MTD territory.
Got it. So even if each thing on its own isn't huge, it all adds up. Now, what about income from a regular job, like a 9 to 5, where you get your pay slip and tax is taken out through payee? Does that count toward this 20,000 DC limit?
Nope. Not for MTD. When we're talking about this 20,000 threshold for MTD for income tax self-assessment, income from employment, the payee stuff, it's not part of the calculation. It's really just about what you make from self-employment and renting out property.
That's a really important point. We need to be super clear about that. Okay, so we've talked about what's changing. Now let's talk about the why. Why is the government doing this whole making tax digital thing? What's the big idea, the big goal here?
Well, the government, they're really aiming to cut down on the number of tax errors that happen. They want the whole tax system to be more efficient, run smoother. And I guess part of it is bringing the UK tax system into the digital age, modernizing it.
Okay, modernize, streamline, all that good stuff.
Yeah. HMRC, they've actually said they think a ton of tax revenue, we're talking billions of pounds each year, gets lost because of, mistakes in self-assessment returns. And those are mostly done manually, right?
So the idea is going digital should minimize those mistakes.
Exactly. The hope is that with digital records and more regular submissions, those tax returns will be more accurate and there'll be less of less of a rush at the end of the year,
Yeah.
fewer late submissions, that kind of thing. Plus, maybe it'll even make the whole experience a bit better for taxpayers. Maybe the system can even automatically take care of some allowable expenses. I mean, it's not just about compliance, right? It could be a win-win.
Okay, so potentially a smoother, a more efficient system for everyone involved.
Right.
So for someone listening right now and they're thinking, okay, this applies to me, what should they be doing? What are the steps they need to be taking right now?
Well, first off, if your combined income from self-employment and property, if it's over that £20,000 mark, the big thing is you have to be using software that's compatible with MTD by April 2028. No two ways about it. And honestly, it's not too early to start looking at the different software options out there. See what's out there, figure out what works best for you, for how you handle your finances, because it's not just about grabbing any software at the last minute. You want something that fits your needs, your way of working.
And I think I've heard something about people being able to sign up voluntarily even before the deadline.
Oh, absolutely. The voluntary sign-up period, it's been open since the tax year 2024-2025.
Yeah.
So if you're someone who likes to be ahead of the game, get comfortable with the new system before it's mandatory, you can definitely sign up early. It's a great way to get a head start and figure out any kinks in how you're keeping your records digitally without a deadline looming over you.
Yeah, take the pressure off.
So it's not just about the software, right? It's also about how and when you submit information. You mentioned quarterly updates. Can you walk us through how that whole process works?
Sure. So instead of that one big tax return at the end of the year, you'll be sending in updates 4 times a year, every 3 months. It's income, expenses, the whole shebang. After those 4 updates, then comes the end of period statement, and finally, you wrap it all up with the final declaration at the end of the tax year. So it's more of a continuous cycle of reporting instead of that one-time event.
And we can't forget about penalties. I know no one likes to think about them, but they're a reality. What do we know about the penalties associated with MTD? Well, the big thing to remember is there will most likely be penalties, financial penalties, if you don't follow the MTD rules. The fine print, all the details, that's expected to be announced probably around mid-2025. But from what we've heard, it's going to be similar to the penalties they have for MTD for VAT. So we could be talking about fines up to £400 for each late submission. Plus, you might get hit with interest charges on any tax you haven't paid. And remember, those penalties, they might kick in even before the whole thing becomes mandatory in April 2028. So the early bird gets the worm, as they say. Get prepared early and avoid those potential headaches.
Yeah, putting things off could really come back to bite you. So what about people who, they love their spreadsheets, they've been using them for years, super comfortable with them? Is there any way they can stick with the spreadsheets under this new MTD system?
Technically, yes. There's this thing called bridging software. It's like a translator. It takes the data you have in your spreadsheet and puts it into a format that HMRC's MTD system can understand. So you can still use spreadsheets and then use this bridging software to send in your digital updates. But honestly, it's not the ideal solution. It's a bit of a workaround. Dedicated MTD-compatible software, that's really the way to go in the long run. Those programs are designed with MTD in mind from the ground up. They integrate seamlessly with HMRC's system and usually have way more features to help you manage all your tax stuff.
So bridging software, it's like a temporary fix, not really a long-term strategy.
Right.
Now, in terms of what people actually need to be recording digitally, any specifics, anything they should be really paying attention to?
Absolutely. Make sure you're digitally recording all the essential financial info. That means all your income from your business, any expenses you're planning to claim as allowable, the total rental income from each property you own, any expenses related to those properties, and any other adjustments that might affect your tax calculations. The more detailed and accurate your digital records are, the smoother the whole MTD process will be.
Smooth and easy, that's what we like. So let's say you're diligently doing those quarterly updates. Does that mean you're completely off the hook for anything resembling the old tax return at the end of the year?
Well, not quite. There's still a step at the end that's kind of like the tax return, and that's the final declaration. But the good news is it's all done digitally, and it's mostly based on the information you've already been sending in through your quarterly updates and that end-of-period statement. So while you might not have that mad rush to gather all your paperwork in January, you still need to do that final check, that final confirmation of your tax position. It's still an important part of the process.
So the frequency of reporting is changing, but the responsibility for accurate reporting, that's still there. What about things like emergency tax codes or if someone's overpaid tax and is due a refund? Could MTD have any impact on those situations?
It very well could. With the more frequent reporting of your income, chances are if something's off, like an incorrect emergency tax code, it'll be spotted and fixed much quicker.
Mm-hmm.
And same goes for refunds. If your quarterly submissions show you've paid too much tax, those regular updates could lead to a faster turnaround on getting your money back. So having more frequent contact with the tax system could lead to quicker resolutions for both of those things.
Okay, so that's a potential plus for sure. Now, let's zoom in specifically on landlords for a bit. We know a lot of people listening have income from property. How does MTD affect them directly?
For landlords, the main point is that £20,000 income threshold. It includes all the income from all the properties you rent out, plus any income you have from self-employment. So even if the income from each individual property is below a certain level, if the total rental income, when you add it to your self-employment income, if it's over 20,000, then MTD applies.
Got it. It all adds up. Now, what about situations where a property is owned jointly? How does that work under MTD?
Even if you own a property with someone else, each owner has to report their share of the income and expenses through MTD. If their total income, that includes their part of the property income, and any self-employment income if it's over £20,000. You can't do a joint return for income tax under MTD.
Okay, so each person is responsible for their own share. That's important for anyone in a property partnership. And speaking of landlords, there have been some changes recently that could tie into all of this, specifically furnished holiday lettings.
Right. So the separate tax rules for furnished holiday lettings, or FHL, they got abolished from April 2025. That means any income from properties that used to qualify as FHL, that's all treated as regular residential rental income now under MTD. So if your total income, including what you get from those former FHL properties, if it's over 20,000, then MTD applies.
No more special treatment for holiday lets. Got it. Now, when landlords are doing their digital record keeping, are there any specific things they should be really careful about? Any tips?
Absolutely. Make sure you're accurately recording all your rental income, the gross amount, and keep a separate digital record of all your expenses, things like agent fees or anything else you can claim as allowable expenses. You need to have enough detail in your records to clearly show the income and deductible expenses for each property.
Okay, good advice. Now, we've talked a lot about what's changing and who it affects, but let's end on a positive note. What are some of the good things about MTD? What are some benefits that sole traders and landlords might see from all of this in the long run?
Well, one of the biggest potential benefits is having a much better idea of your tax situation throughout the year. With those regular updates, you'll be able to see how much tax you might owe as you go along. No surprises at the end of the year, no huge tax bills sneaking up on you.
Right, so better for planning, better for cash flow.
Exactly. Plus, since you're reporting more often, you're more likely to catch any mistakes you might have made in your record keeping and fix them early. And as we mentioned before, if you've overpaid tax, you might get your refund quicker. So even though there'll be some adjusting to do at first, MTD could actually make dealing with taxes a lot smoother, a lot less stressful for a lot of people.
Okay, so potentially less stress, more control, and a clearer picture of your tax situation. That's a win. So, to wrap things up, what are the key takeaways you'd like everyone listening to remember about these changes?
The main thing is, while April 2028 is the official start date, don't wait till the last minute. Start getting ready now. Penalties for not complying, they're probably going to start sooner than 2028.
Yeah.
So start looking into MTD-compatible software. Maybe even start using it voluntarily just to get the hang of it. And for landlords, especially those with lots of properties, letting agents or jointly owned properties, now's the time to really get your head around what you need to do for digital record keeping.
Great advice. So just to be crystal clear, making tax digital is on the way, all laid out in the Spring Statement 2025. It's going to be mandatory by April 2028 for sole traders and landlords in the UK earning over £20,000. That means keeping digital records and sending quarterly updates to HMRC. And remember, penalties for not following the rules, they could start even before 2028.
Couldn't have said it better myself. It's really important for everyone who's affected to think about how these changes are going to impact them personally and start planning now for that switch to digital record keeping.
Now, for our listeners who want to dig deeper, learn more, explore their options, where should they go?
The gov.uk website, that's your best bet. It's got all latest info on MTD. Just search for Making Tax Digital and you'll find tons of resources. Also, it's a good idea to start looking into the different MTD-compatible software options out there and see which one's the best fit for you for how you handle your finances.
Perfect. Thanks for all the clear and helpful advice. And again, big thanks to Pro Tax Accountant for setting up this important discussion. So as we head into this new era of digital taxes, what are you going to do to make the transition smooth and avoid those penalties? That's the question we all need to be asking ourselves. Thanks for joining us today.